Today's special segment is about the Kiwi dollar. Here are 5 characteristics for the Kiwi. Some of them are in common with the Aussie, some aren't. So first of all, for most obvious thing, like the Aussie, like the CAD, a few other currencies, Kiwi dollar is a risk currency. Okay, that means that when things are good, the Kiwi dollar with its higher interest rate, non-zero interest rate, even if they cut it today, is attracts sort of risk taking. And when times of trouble, it falls. Okay, it's not always a one-way street, but that's the main theme. Okay, so when stock markets are on the rise, especially in Asia, the Kiwi rises as well, and the other way around. Another characteristic of the Kiwi in terms of fundamentals is that many figures are released only on a quarterly basis. So like Australia, CPI and PPI, inflation figures are released only once per quarter, okay? But also employment. Only once per quarter, the officials in New Zealand release their employment report, okay? The same goes for retail sales, which is released everywhere else on a monthly basis. So in order to compensate for retail sales, many look also at a figure called credit card expenditure or something like that, credit card spending, because as a developed country, Kiwis use used credit cards for many transactions, and that's why how they sort of can assess the level of retail sales by looking at credit cards once a month instead of waiting for the retail sales report, okay? And like in Australia, GDP, of course, like in most countries except Canada, is released once a quarter, but this is always one and final release, okay? Third characteristic of the Kiwi is that it can get carried away after the Australian dollar, okay? So if we have some good news for Australia, we can see the Kiwi also climbing along the Aussie dollar. So in some cases, they're trading in tandem. And if we have, for instance, a rate cut from Australia, many expect a rate cut from New Zealand, and the Kiwi can fall. Okay, so sometimes it gets sort of carried away after the Aussie, and also because in Australia you have more higher frequency of data. Okay, but to contradict that just a bit, and not the fourth point here is that it doesn't always follow the commodity camp. Okay, so if we look at Kiwi dollar as a commodity currency, it's a bit different than others because the main exports from New Zealand are agricultural, milk, dairy products. There's much more clear demand for food in comparison to oil prices in Canada, or iron and copper and other metals which are used for industry and housing, and this comes out of Australia. So in times of trouble, when other commodities are falling, you can see that the demand for milk, for other dairy products, for wool, agricultural products in general is much more stable. Okay, so yeah. And the fifth point, this is similar to the Australian dollar, and of course it can be controversial. I see it as, it usually appears on my list of the top five most predictable currency pairs. Okay, it doesn't always top the list, it usually doesn't top it, but it's usually sort of leans to the more positive camp in terms of predictable technical behavior. For instance, this 70-50 double top is very, very nice. Okay, so that's a special segment for the Kiwi. I see questions here about this. Well, Fabian asks, how much is the Kiwi dependent on Chinese data? Well, the easy answer is much less than the Aussie. Okay, but New Zealand sells dairy products also to China. But even if, let's say, we have less factories built in China or less dwellings, residential property erected over there in the world's second largest economy, people still drink a lot of milk, eat a lot of cheese, and by the high quality New Zealand wool. Okay, so that's my fourth point, that it doesn't always get that carried away on Chinese data. It's sort of more peripheral. The Australian dollar is much more sensitive. Okay, but again, if we have, so I would say that New Zealand is more affected by Australian figures just because markets are sort of getting carried away. Yeah, China buys a lot of powder milk and water, indeed. And I think that China also buys the actual cows, not only from New Zealand, but also from Australia and Uruguay. Okay, eventually they won't be dependent on anybody, but at the moment, New Zealand exports a lot of dairy products, milk powder for babies, cheese, you name it. Okay, so yeah. The question from Fabien.